Welcome to Fund to Money, your 24 into 7 buddy on all matters related to personal finance. In this web series, we are discussing various things you need to keep in mind while investing in stocks. That's right, we're talking about stock market investing. There are no easy quick tips. Okay, now in this particular segment, we'll be discussing what to make of terms like economic growth, economic reforms, India's GDP growth. What do they have to do with stock market prices, stocks that you're owning, stocks that you're planning to own? How does one make sense out of these figures? That's coming up shortly. Well, as I was saying, economic growth, economic data, larger health of the economy, how does it really impact the stock market investor like you? To help us figure this big picture out for a smaller, relatively smaller issue, but important issue like stock market investing, stocks investing, we have with us our stock market expert MOHIT SATYANAND. Hi Mohit. Mohit, a lot of these high sounding words, economic reforms, economic growth rate of India, GDP growth rate of India, global GDP growth, and then we get to hear that the stock market has gone up, down, whatever, sideways. In simple words, how does an investor make sense of it?
A rising tide lifts all boats. Everybody loves growing economies, and with good reason, because companies grow, economies grow. When economies grow, companies grow. And growing economies can mask a lot of temporary inefficiencies in a company. If companies are basically unsound, if their managements don't understand what they're doing, then it remains only temporary. But if they're able to grow out of them, then these rapidly growing economies can create enormous wealth. They create enormous wealth for all participants in an economy, whether it is producers or employees or consumers. And we're seeing that right now. We're seeing that right now in the Indian economy, where the Indian economy is the fastest growing major economy in the world, and the money keeps coming into the Indian stock market. And this drives a sort of what I call tezi mein tez, mande mein manda kind of psychology. Because when the money is chasing stocks, people are looking in the rearview mirror and saying stock prices have gone up in the last 6 months, therefore they will keep on going up, so more people put money in. At the economic level, this creates a lot of benefits, because what it does is that when that money comes in from abroad, firstly, it means that for a company which is a net importer of goods and services like India, it means that it reduces the pressure on our foreign exchange, and therefore it helps to dampen inflation. Secondly, countries like ours, growing countries like ours, are also perennially short of investable funds. They always need fresh capital. So this money coming in also at the margin reduces interest rates by making more investable funds available. And this again makes it easier for the economy to grow. So, broad picture, a growing economy is great for investors.
So, the other side, of course, Mohit, is in a rising tide, there's flotsam and jetsam.
Yeah.
You have got lots of things floating around. So you obviously have to look into the company. But here we are talking about the big picture. But before I ask you a relevant question, if you're liking this video, you better subscribe to our channel. And of course, if you disagree with us, there's the comment section. You need to go down and give your comments or suggestions. But
and if you persuade us that I'm wrong, then next time You can be sitting here.
Oh, yes.
Udayan will be asking
That's
you
a
the
deal.
questions.
That's a
Yeah,
deal, and
yeah.
that's
And I'll ask some tough questions.
Yeah.
then.
But Mohit, before we wrap up this particular segment, I think it's worthwhile pointing out in this particular segment that most Indians haven't really taken advantage, have not been able to take advantage of the enormous amount of growth that's happening in the stock markets. It's anybody but the Indian who's benefiting from the stock market, isn't it? Isn't that the lay Indian?
That's absolutely true. That's absolutely true. And I think it's a great pity that that Indians have not taken advantage of the stock markets. I just want to make 3 brief points over here. The first is that it is not for everybody to invest in stock markets directly. And that if you are convinced of the broad case for equities, then you're probably typically better off investing through a mutual fund. Secondly, Indians seem to be under this illusion that real estate is the best kind of investment to make. I completely disagree, because real estate investments are very illiquid. That means you want to sell a house today, you can't sell it today. It may take you 3 months, it may take you 6 months, it may take you 12 months, and the transaction cost is extremely high. Typically, on the buy side, it's 7 or 8%, because you're going to pay 5 or 6% registration fee, plus the broker, etc., etc. The third, which is partly true, is that in the past, stock markets have been subject to a lot of unscrupulous promoters, manipulation, etc. But I think that's come down hugely. It's come down hugely. Indian markets are fairly well regulated. The transparency of what's happening in the markets is a lot more. The frequency of data availability is a lot higher, and you have really good fund managers out there who can manage your funds for you. So it's been demonstrated time and time over again in economies all over the world that the most rewarding way in which to participate in a growing economy is through the stock markets.
There you have it. Economic growth, good economic growth leads to good stock market performance, a rising tide. It's a wealth creation opportunity. Wealth, when I'm talking about wealth, we're not talking about very rich guys. Even you can create wealth. Your investments can do well. Your kids can go abroad or to any good college here, and you don't have to take an education loan or anything. You can have a very decent, good and enjoyable retirement. The list of benefits are endless. You have to smartly invest in stocks directly or indirectly. So if you have liked this video, once again, please go and click on the like button. Please subscribe to our channel and stay connected with us on all leading social media platforms.